Okay, let's dive into this. Welcome to The Explainer. Today, we are going on a hunt for literally the world's most lucrative investment. If you're looking to maximize your returns and secure a financial future that outpaces, well, pretty much every traditional metric we're taught to worship, you are in exactly the right place. So I want to pose this question directly to you, right off the bat. What is the best performing financial asset in the world? Take a second, think about it. Your mind probably goes straight to the usual suspects, right? Maybe you're thinking, oh, it's commercial real estate in a booming metropolis. Maybe you're betting on Bitcoin or some other explosive crypto. Or, perhaps you're a traditionalist, pointing straight to the S&P 500. Well, I'm here to tell you, based on the fascinating data we're unpacking today, it's actually none of those things. The real answer is hiding right in plain sight. Moving into Section 1, the ultimate financial asset. To find this elusive asset, we really have to completely reframe how we look at our portfolios and our lives. Look at the contrast here. It brilliantly illustrates the difference between two completely different cultural paradigms. In the traditional Western view, we tend to look at things like tuition, courses, and skill building as this massive burden, right? We see it as debt, a crippling expense we just have to survive to get into the workforce. But in stark contrast, there's a Chinese philosophy that looks at education in a completely different light. They don't see an expense at all. They see a high-yield asset. It is a complete 180-degree shift in how we think about money. That brings us to Section 2, the Chinese investment philosophy, where we'll explore this ancient and modern viewpoint a bit deeper. The crucial point here is shifting the mindset from just spending money on school to allocating capital for a guaranteed massive yield. This isn't about some vague cultural duty to get good grades or make your family proud, and it is absolutely not viewed as a sunk cost. No, this specific philosophy views education purely as a strategic, highly calculated financial asset. It's an active allocation of capital. You aren't just paying for a piece of paper. You are basically acting as an angel investor in your own earning potential. When you start viewing your skills as an asset class, just like a stock, the whole game changes. All right, Section 3, doing the math. It's time to move beyond philosophy and look at the hard, undeniable mathematics of this asset. $100,000. For our model today, based on the source data, this represents a standard, significant upfront investment in a higher education degree or some highly specialized skill acquisition. It's a chunky capital outlay for sure. It's the kind of number that makes most of us sweat and immediately think about debt. But remember, we're thinking like investors now. We aren't spending. We're deploying this $100,000 capital. $50,000. Boom. That represents the annual earnings increase generated by that specific education investment. Because you deployed that initial $100K, your market value jumps. You aren't just making your baseline salary anymore. You're making your baseline plus a $50,000 premium every single year, directly because of the asset you acquired. Let's walk through these steps, because this incredibly simple math creates a staggering return on investment over a professional lifetime. Step 1. You invest the $100,000 up front. Step 2, you leverage that new asset to increase your annual salary by $50,000. Step 3, you recoup your entire principal investment in just 2 years. Seriously, think about that. 2 years. After month 24, that initial capital is fully returned to you in the form of increased wages, and from that point forward, you profit indefinitely. You're essentially collecting a $50,000 dividend on a fully paid off asset every year for the rest of your working life. And now for Section 4, beating the stock market. We are about to pit this educational asset against the traditional king of wealth generation. I want you to imagine, just for a moment, that instead of investing that $100,000 in your own education, you took the exact same money and parked it in a standard, broad market mutual fund. You just let it sit there, letting the market do its thing over the course of a long career. It's the standard financial advice we all hear, right? But how does that actually stack up against the education premium we just calculated? Now, what's really interesting about this slide is how the lifetime returns of the education investment completely crush the mutual fund's performance. The sheer scale of the difference is staggering. Sure, the mutual fund grew and provided a moderate, respectable return, but that $50K per year education premium, it's not even close. Because that $50,000 dividend doesn't just happen once, it stacks year after year, decade after decade, and it's completely unaffected by market crashes or recessions. The compound effect of higher baseline earnings exponentially outpaces the passive market growth of that same original capital.
Which brings us to the core thesis of our source material today. The education investment is the only asset that can beat the stock market. It's a massive, bold statement, but the math backs it up entirely. When you strip away the emotion, the stress of exams, the cultural baggage of student loans, and you just look at education as a cold, hard financial asset, its performance is unparalleled. You are the high-yield asset. Your capability is the growth engine.
So, I want to leave you with this final provocative thought today. Based on the undeniable math and this incredibly empowering shift in financial philosophy, where are you investing your next 100 grand? Are you going to park it in a mutual fund and cross your fingers? Or are you going to invest it in the only asset proven to systematically beat the market? Yourself. Think on that. Thank you so much for joining me for this explainer. Keep learning, keep analyzing, and I'll catch you on the next one.